Assalamualaikum warahmatullahi wabarakatuh. My name is Zaitun binti Zakaria. Before I proceed with the case study, I will give an overview about the company. Okay, actually, Besico is a public listed company in Bursa Malaysia in May 1981 that involved in manufacturing of flat steel product. It engaged in a 3 business division, which are steel production, property development, and also furniture production and trading. Besico once is a profitable company, but since 1998, it posted a net loss of 341.68 million, and it continuously stayed in red. So because of that, Besico was classified as a PN17 status company. So we move to the case study. First is respond to the audit queries from the audit committee of Besico to the auditors. Okay, first is about the going concern. Okay, to assess the going concern's ability, Besico first need to check out on the financial trend. Okay, by considering by looking at the trend analysis. Okay, Besico can compare the information of the current financial statement to the prior year's financial statement and to the comparable industry ratio. The negative financial trend indicate that the company performance is weak. Okay, second is to consider the effect from the outside event have on the continuing success of the company by looking at the 3 ratio, which is current ratio, debt ratio, and also net income to the net sales. Okay, the current ratio is to measure the company's ability to pay its short-term debt with the liquid asset. Besico need to evaluate the current ratio as a continuing trend. This is because when the company this is because company may have opted to make an unusual cash disbursement at the year end that are not indicative of the business overall health. Okay, second is debt ratio. Debt ratio is to see the insolvency of the company. If the total debt is more than the total assets, the company actually is insolvent and have a significant issue in the going concern. Third is net income to net sale. Okay, net income to net sale is measure how well the company is managing its expenses. So in case of Besico, the management did not conclude that they are no longer able to operate the company. So we decide that the Besico still can operate as a going concern with the help of their future plan. Okay, next we move to the future plan of the Besico. Okay, future plan of Besico is Besico can need to construct a better structured and efficient regularization plan with the help from the professional consulting firm. Okay, Besico also can start a sinking fund that can be used to deposit and save money to repay a debt, extend a loan period as long as they can, approach angel investor to raise more funds, or consider the financial support from the lenders or creditors. Okay, next is about the deferred tax assets. Okay, according to MAF671, deferred tax asset shall be recognized for all the deductible temporary difference to the extent that it is probable that taxable profit will be available against which the deductible temporary difference can be utilized. Okay, deferred tax asset is arise from the unused tax loss and also unabsorbed capital allowance. The existence of the unused tax loss give a strong evidence that the future taxable profit may not be available. Okay, since Besico has suffered loss for past few years and has no sufficient taxable profit available, it means that it is not appropriate for the Besico to continue record the deferred tax asset in the balance sheets. Okay, next is on the property, plant and equipment. Okay, the impairments of the group property, plant and equipment is recognized when there is an evidence or indicator of the impairments to the assets. Okay, the company have to consider some external factors like market condition, new legislation, or regulatory enforcement. Okay, an asset is said to be impaired when the carrying amount of the asset exceed its recoverable amount. Okay, when the carrying amount is greater than the recoverable amount, it will derive to the impairment loss. Okay, the impairment loss shall be recognized immediately in the profit or loss unless the asset is carried at revalue amount. Okay, if the asset is carried at the revalue amount, any impairment loss derived shall be first recognized in the under comprehensive income. then it will have to offset against the any revaluation surplus. Okay, the balance will then recognized as an expenses in the profit or loss. Okay, in the case of Besico will provide a relevant document relating to the carrying amount, recoverable amount, and also the external factors to the auditors to indicate the impairments of the property, plant, and equipment. Okay, next we move to inventories. Okay, according to MFRS 102, inventories shall be measured at the lower of cost and net realizable value. Okay, Besico will find the net realizable value of the inventories and compare it to the carrying amount to assess for any impairment. In order to ascertain the recoverability of the inventories, Besico will provide the auditors with an appropriate document related to the realizable value and also the carrying amount of the inventories. Okay, last but not least is the wondrous contract. In accordance with the MFRS 137, if an entity has a contract that is wondrous, the present obligation under contract shall be recognized and measured as provision. Okay, wondrous contract is a contract in which the unavoidable cost of meeting the obligation under the contract exceed the economic benefit expected to be received under it. Or in the simple word, we can say that wondrous contract is a loss-making contract. Okay. The provision is recognized according to the lower of penalty of the cost of the contract. Okay, that's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Jasmine Huzaina binti Zerni, and I'll be talking about financial performance. As we know, Besico has not been turning profit for a few years now. But why? Let's look at a breakdown of the individual items from 2015 to 2016, shall we? Here, we can see that the value of most items faced a noticeable decline, in particular revenue, raw materials and consumable used, as well as other operating expenses. To explain it further, in 2015, revenue was 2,087,508, but decreased significantly in 2016, totaling to only 701,779. That's a decrease totaling 66.38%. Likewise, raw materials and other operating expenses decreased by over 50% as well, as seen here. Raw materials dropped by 74.7%, while operating expenses went down by 62.39%. Therefore, the positive growth of the net loss of 12.91% can be attributed to these reductions rather than positive business growth. Next, we'll look at a line graph plotting out the variance between the items over 2015 and 2016. The large spikes indicate instability or drastic measures taken by the company, the measure being Besico's closure of their subsidiaries, particularly Giant Steel. But what led us to this point? Let's take a look. One reason is the global and local steel market. Chinese steel producers had the capacity to produce as much steel as all steel producers globally, thus creating an oversupply of steel. Additionally, due to subsidies and government encouragement, China started exporting their steel products for cheap prices, causing a decline in worldwide steel prices. While China reduced its production and exports in recent years, the steel prices have still been volatile, especially as certain steel mills in China started reopening and continuing operations in response to rising prices. Giant Steel, as well as some other local steel companies, were impacted by the influx of foreign steel imports, believing that the Malaysian government's efforts to curb the foreign imports were not enough. Even after China reduced its prices, Giant Steel still faced competition from local producers who priced their goods at a lower rate. Moreover, there was also the matter of the rising costs of production, such as the cost of raw materials like coke, scrap, and iron ore. Giant Steel also lacked innovative technology and methods, something they had hoped to gain from the foreign investor to improve their steel production. Due to this, the quality of their products, as well as their ability to fulfill orders, were often questioned and criticized, leading to a decline in customer orders. In addition, Besico's revenue from the real estate division also faced declines. This is due to Bank Negara Malaysia's stricter regulations to reduce household debt and the rise of cautious spending among consumers. Thank you. Next, we'll be looking at Besico's financial position.
Hello, I am Rusna. Next, we will discuss about statement of financial position for Basico. As everybody know, the important element in statement of financial position is asset, liability, and equity. Therefore, we have prepared a table that contains all of these elements, which is we have list of the total asset, total liability, and total equity. In this table, we mention about the company value. The company value are same as the total equity. In this table, you can see that the company value is showing the negative amount, which mean that the company have problem with their solvency, which is the company is insolvent. In the statement of financial position, the company can conclude the working capital by minusing the current asset with the current liability. Based on the statement of financial position of Basico, working capital are negative for the both year, which is 2016 and 2015. This means the current liability of Basico are more than the current asset. So the company are not very liquid and cannot pay back the debt with the current asset. Therefore, the company need to find the investor to give their finance. For analysis of Basico, we use two tools, which is vertical common size analysis and horizontal analysis. A vertical common size analysis are prepared by dividing each item on the balance sheet by the same periods and expressing the result as percentage. With this analysis, we will find out what is the mix of the asset being used, how the company finance. So let's move to the first one, which is the asset of Basico. Based on the analysis, we can conclude that majority asset of Basico is from non-current asset. The company are financing for the investment in the property, plant and equipment compared to other non-current asset. Then for the current asset, the highest amount are from inventory. Next, we will move to the liability of Basico. Based on the analysis, the company choose to finance its company by using current liability compared to the non-current liability. In the non-current liability, the Basico choose to finance the company by using bond and debt compare other type of non-current liability. Meanwhile, in the current liability, the company are in debt in form of trade and other payable, which is more than 50% than other type of current liability. Now, it's time to look at different way to evaluate the statement of financial position. With horizontal analysis, we look across the balance sheet at the year over the year change. When we use the horizontal analysis on the asset of Basico, we can conclude that total asset of Basico are decreasing from 2015 to 2016. This because for the non-current asset, the company do not invest any type of asset. The increasing and decreasing of non-current asset are depending on its revaluation only. Meanwhile, for the current asset, majority asset are decreasing because the company do not making any profit. This is because the company focusing on pay back their debt. Next is the horizontal analysis for liability of Basico. Based on the analysis, the total liability of Basico are increasing by 5% from 2015 to 2016. That means the company are making more loan to finance the company. On the non-current liability, majority are decreasing and only some liability are increasing with minimum value. Meanwhile, the current liabilities showing that increasing in trade, payable and loan. This is because the Basico the new cannot cover the expenses and lead to the debt. Last but not least, the horizontal analysis based on the equity. Based on the analysis, the equity are decreasing by 43% from 2015 to 2016. The company are not seek the finance based on share because they are not increasing on the share capital. The reverse, the reserve show the decreasing because the company are losing. The company need to restructure back all component in the business and try to reduce the cost to make sure they can stay in the industry.
Assalamualaikum and hi everyone, I am Nadra. I will present about financial ratio analysis. We have analyzed four types of ratio for Besico, which is current ratio, quick ratio, debt to equity ratio, and profit margin ratio. First is current ratio. Current ratio is liquidity ratio that measure a company ability to pay short-term obligation. It tells investor and analysts how a company can maximize the current asset on its balance sheet to satisfy its current debt and other payable. As we can see, the formula of current ratio is current asset divided by current liability. For 2015, current ratio for Besico is only Rm 0.21 cent, and as for 2016, it have decreased to Rm 0.11 cent only. It means for every 1 ringgit of current debt, Besico only have 21 cent for 2015 and 11 cent for 2016 available to pay for the debt at the time. Why? Why current ratio below than the amount of current debt? This because its current liability is higher than current asset. Second is quick ratio. Quick ratio is an indicator of a company's short-term liquidity position and measure a company ability to meet its short-term obligation with its most liquid asset. Quick ratio formula is current asset minus by inventory and divided with current liability. For 2015, quick ratio for Besico is only Rm 0.10 cent, and for 2016 also decreased to Rm 0.07 cent. This means Besico may not be able to pay off its current obligation using only quick asset as its quick ratio is below Rm 1 ringgit. Third ratio is debt to equity ratio. Debt to equity ratio is calculated by dividing a company total liability by its shareholder equity. The ratio is used to evaluate a company's financial leverage. As you can see, debt to equity ratio for Besico for 2015 and 2016 both years have negative ratio. For 2015, Besico have negative 4.02, while for 2016 it have negative 2.74. The result means that Besico only had negative 2 ringgit and 74 cent of debt for every ringgit of equity. Low debt to equity ratio indicate a lower amount of financing by debt via lenders versus funding through equity via shareholder. Last but not least is profit margin. Profit margin expressed as a percentage. Profit margin indicate how many cent of profit has been generated for each ringgit of sale. For Besico cases, it doesn't have net income but it have net loss. So, net profit margin for 2015 of Besico is negative 31.45%, while for 2016, it decreased to negative 79.91%.
Assalamualaikum, my name is Vernon Salmira. So now let's move to the issue faced by Besico and Giant Steel in their business. The first issue is intense competition among the local steelmakers due to the dumping of cheap steel from Chinese steelmakers as they offer lower price and the import duties is also lower. So we have suggested for Giant Steel to restructure their production process using quality management system that focus on the quality of the production and demand of customer. By doing this, Giant Steel will gain competitive advantage. Okay, the next issue is Giant Steel set the selling price of their production above the global average price, which led to the buyers' dissatisfaction. This has made Giant Steel lose their customers. Thus, for the solution, Giant Steel should reset their pricing policy and business strategy. The other issue is Besico wants to shut down Giant Steel due to its bleeding operations. As for solution, Besico should continue the operation of Giant Steel. However, they have to retrench some employees with the proper guideline to reduce the cost. For regularization plan, companies that fall within definition of PN17 need to submit their proposal to Bursa Malaysia to restructure the company in order to maintain in the listing status. Besico need to propose regularization plan that will help the company to increase their working capital. This will help to convince the investor and make companies stay listed in Bursa. There are 6 items that Besico needs to include in their regularization plan. Okay, the first one is cost reduction. It is advisable for them to cut the labour costs. However, they still need to comply with the Employment Act and follow the guideline provided. There are 2 methods of retrenchment, which are full or partial retrenchment and voluntary separation scheme. As an employer, Besico should consider the following before retrench the employees. The first one is not discriminate against employees or group of employees and make selection based on factors such as their ability to contribute to the company's future business needs. They also need to treat the affected employees with dignity and respect. They also need to help the affected employees look for the alternative jobs in an associate company, other companies, or through outplacement assistance programs such as job fairs, career fairs, and career advice. According to the retrenchment guideline and principle in Malaysia, these are the 4 steps that need to be taken by the employer before the retrenchment. So now let's take a look at the first step, which is the criteria for selecting employees to be retrenched. Giant Steel need to consider employees' ability, experience, skill and qualification, age, family situation, length of service, and status before making the retrenchment. Most commonly, principle applied by all the company is last in, first out, which means the most junior employee would be retrenched first. So now let's move to the second step, which is providing the employee with notice. Under Section 12, Subsection 2 of the Employment Act, state that the length of notice period depends on the employee's length of employment, which are for employees which work less than 2 years, then the notice should be not less than 4 weeks. For the employee that do not fall within the Employment Act, the length of notice period would be in accordance with their employment contract. The third step is reporting the retrenchment to relevant authorities. Under the Employment Retrenchment Notification 2004, employers are required to complete an Employment Notification Retrenchment Form, which is Borang PK, consisting of different parts which must be lodged with the nearest labour office. Borang PK requires employers to provide information including the reasons for the retrenchment, the number of local or foreign workers, the date of retrenchment, and the benefits payable to the workers being retrenched. Failure to do so would constitute an offence under Section 99A of the Employment Act, and the employer is punishable with a fine of 10,000 ringgit. For the last step, the employer need to provide the retrenchment benefits to the retrenched employee. Pursuant to the Employment Regulation 1990, an employee who falls within the Employment Act is entitled to receive termination benefits if employed under a continuous contract of employment for at least 12 months before the retrenchment exercise. The amount the employer need to pay for the workers who work less than 2 years is 10 days' wages for every year of employment. Employees that do not fall within the Employment Act, the retrenchment benefit is depend on the terms of the employment contract. So now let's move to the second item of the regularization plan, which is disposal. The first one is Besico can dispose property division, and the second one, dispose few hectares of land. So now let's see the disposal of property division. It is advisable to dispose property division due to tightening measures by Bank Negara Malaysia to curb rising household debt and cautious spending among consumers. Property is being disposed rather than Giant Steel because it is believed that the uptrend of the industry in future due to large domestic infrastructure projects such as MRT and LRT Line 3. Then is dispose few hectares of land under property divisions project. Bersiko need to dispose some of lands through its subsidiary group under the property division. By doing this, Bersiko can get fast money. The reason to dispose this land is because the demand for the property division will not be high in the future. The third one in the regularization plan is pricing policy. Giants still need to overview the price, consider the cost, analyze the demand, potential customer, and market competition to ensure the new set price is reasonable and acceptable. How to reduce this cost of production? Giant Steel should find a new supplier that provide a good raw materials with a lower price. Giant Steel also need to modernize their equipment to reduce the cost of manufacturing the steel. Reviewing this price policy will help Giant Steel to set the price of their production based on the market price. And they also can increase the sales volume, attract customers' interest, and increase the profit margin.
The next issue is debt. Bersiko was heavily indebted as the leverage ratio is 11.0 for 2014, which Bersiko was considered insolvent. What we would like to suggest is to seek assistance from Corporate Debt Restructuring Committee. So what is CDRC? CDRC is a preemptive measure by the Malaysian government to provide a platform for corporate borrowers and their creditors to work out feasible debt resolutions without having to resort to legal proceedings. Companies seeking to resolve their debt obligations through CDRC must fulfill a few broad criteria. Number 1, aggregate indebtedness of 10 million ringgit or more. Number 2, at least 2 financial creditors. Number 3, non-receivership or liquidation, except for those where receivers have been appointed only over certain specified assets and the directors remain in control over the company's overall operations. Number 4, experiencing difficulties in servicing their debt obligations but may not have already defaulted, provided they meet criteria number 1 and 2. Or any company listed on main market or ACA market of Bursa Malaysia that has already been classified as a PN17 or JN3 company respectively. Thus, Bersiko is eligible to request the assistance from CDRC as Bersiko was classified as PN17 status company. By this, Bersiko is able to consolidate all debts into single lender, enjoy lower interest rates, and restructure to a more suitable loan facility. The next issue that needs to be included in regularization plan is product quality. So based on the research done, Bersiko's product quality was not promising and kept fluctuating, especially when the exact specification was not met. Therefore, it is better to implement industrial applications such as number 1, asset performance management. APM can help make sure that Bersiko systems are delivering a differentiated performance, avoiding unplanned downtime, and optimizing the maintenance spend by shifting from reactive to proactive maintenance culture. Number 2, quality management system. QMS assists in meeting companies' requirements, which ensures compliance with regulations and provision of products and services in the most cost and resource efficient manner. And number 3, management execution systems. MES can assist Bersiko to improve on-time delivery performance, optimize operational costs, and ensure order specifications are met with consistency. Last but not least is technological development. Bersiko should consider to include technological development as part of their regularization plan. They should invest in digitalization as it provides various benefits. Real-time order transparency and higher delivery performance via shorter delivery lead time on online e-business platform. Big data analytics enables Bersiko to supply and demand all information to be available to all producers, and it enables Bersiko to track every aspect in steel plants such as production, safety and quality, energy usage, and constantly sensing and responding to inputs. So, as previously mentioned, one of the reasons why regularization plan is needed is to appeal in staying listed in Bursa. However, other possible solution that we have came up with is to not appeal to Bursa and change to a delisted company. First of all, what is delisting? Delisting is the removal of a listed security from a stock exchange. The delisting of a security can be voluntary or involuntary and usually results when a company ceases operations, declares bankruptcy, merges, does not meet listing requirements, or seeks to become private. Involuntary delisting refers to the forced removal of listed company shares from the stock exchange for various reasons, like non-compliance with the listing guidelines, late filing of reports, and etc. Voluntary delisting refers to listed companies voluntarily opt for removal of securities from Bursa where the company decides to go private. So, what if Besico decides to delist and become a private company? Besico will continue to exist and operate as usual but as unlisted company. By delisting, Besico does not need to comply with the minimum listing requirement and criteria regulation of Bursa. Also, the company does not need to incur listing expenses and the annual trading cost. However, the downside are Besico cannot raise funds from public and lose their public trust. It can also affect the book value of their company. The share price of company will decline significantly as well, and the company will have to pay higher rate of loan interest due to lack of credibility. All in all, we have to bear in mind that Besico is in the midst of financial distress. It is important for them to gather investors, especially from the public. Therefore, it is recommended that Besico to stay listed. On another note, Besico should consider to change their organizational structure. As you all know, Charles is the chairman and managing director of Besico together with his nephew Alfred as the executive director of the company. Issue of corporate governance is raised here as there is a conflict of interest. A lack of effective corporate governance at the executive and management level can lead to bias and bad decision making, which eventually can lead to a lower overall value of the company and harder to meet its financial obligations. To restructure, Besico should appoint different people for chairman and CEO. In conclusion, Besico might continue to face greater financial distress without undertaking the suggested measures that was discussed earlier. Therefore, Besico should take reasonable actions so that the group can be great again in the near future. Thank you.